we've been framing it as a protectionism push that is going on, and that is not something that rate cuts will ultimately be very effective.
But these are the same consumers that may pay for higher goods when they go to their local Walmart or wherever they're shopping.
What has to happen is the US and the China have to figure out a way of coexisting.
I don't disagree, but as a short-term measure, if you give the customer more back, lower their mortgage costs, lower their credit card costs, lower their student loans, then doesn't that help them when they're facing higher costs on the shelves?
There's no doubt. This is why they're going to do that. This is why we think they're going to be. There's going to be an additional 5 basis points in October, but the market is expecting a lot more than that coming over the course of the next few quarters. We had 100 basis points additional cuts, and this is where we are skeptical that this is going to happen. So yeah, in the near term, a bit more.
All they're interested in do is stimulate more private equity, and BlackRock's going into private equity. It made its first private equity. That Brands company in New York was the first one. So you've got the fund management groups now going into private equity. You've got the private equity groups going into some fund management as well. So cheaper debt is just going to make people refry the beans on existing investments, and it's going to make valuations in private equity will probably continue to rise.
So we get the warning message from central banks that there are excesses in some asset prices, some asset classes. That's what we get, and we still have the rate cuts.
That's right.
We've seen it before.
And this environment where we have more rate cuts, as you're saying, is making the case for private markets stronger. So from our client perspective, need to search for yield, you need to meet your return targets, and in that context, we expect the demand for private markets, private equity, private credit, infrastructure to be supported.
And corporates probably buying more to buy back more stock?
Well, that has been certainly a dynamic we've seen. I think the big question is, are we going to get to a point where now we're going to see this low rate environment, low financing costs, allowing companies to deploy in real investment?
We've done you a disservice. I've done you a disservice. I didn't realise that you were not only the Deputy Governor of the Bank of Canada, but you were also the Associate Deputy Finance Minister, also served as Canada's representative on G7 and G20. That's a brilliant way to frame the next question. That is, central banks, we've put them over here, and that's all we've discussed so far as well. But in terms of fiscal support and in terms of international coordination, two parts that you have looked at extensively as part of your career as well, it's non-existent. I was down in Biarritz, and Mr. Trudeau and the rest were down there. There was nothing. There was love. I mean, to be fair, Monsieur Macron did a great job in avoiding a fight with Mr. Trump. But apart from that, there was nothing there. Are you worried there's a lack of coordination and a lack of fiscal response?
Yes, I'm worried about this. I mean, if we go back a few years ago, I mean, the G7, the G20 were real venues where there was, I mean, we were always critical of these.
Pittsburgh, London, these were meaningful meetings at the height of the crisis.
But there were clear actions that were coming out of these. Right now, it's more difficult to see how that's going to happen. I mean, clearly there's not this natural setup for coordination. I do still believe, though, that under pressure, if we were to see like significant global pressure, it's going to be in the incentive of these leaders to coordinate one way or the other. It's going to be more challenging. It's not as automatic as it might have been in the past. But under pressure, there's going to be a natural tendency.
Less cooperation and less integration?
Well, I think you've mentioned that a bit earlier, I think before I came on set, that this populism dynamic that is happening means that all the countries are more like introverting, looking inward. And as a result, they're catering to more domestic population and playing that up.
Yeah.
And that's less conducive for engaging in what might look like international considerations.
But when the crisis comes, they'll all huddle together.
I think so, because they'll see now the clear and present danger that coordination will help to.
Jean, just very quickly, I don't know whether it's your bag, but big discussion this week about the debasing of monetary policy with Libra. Your view, how dangerous is it for the global economy when Bank of Canada's done so much work on cryptocurrencies?
So there's a lot going on in this space, and there's the private version of this, Libra, and these cryptocurrencies. Where we see that mostly as this is an issue of payment system. This is like a payment technology. It's not really money.
Banking the unbanked.
And it helps. It could help to
those launderers, they're unbanked, aren't they? We better leave it. Sean Boivin, we've got
Who's going to win the election? We've got to ask you that. Who's going to win the election?
It's very tight. It's very tight. So I'll keep it there.
Sean Boivin, thank you very much indeed. Really nice to see you. No wonder you're the head of BlackRock Investment Institute with a CV like yours. Nice to see you, sir.
Very good to see you. Thank you.
Right, let's take a very short break.
Thank you.
Plenty coming up. We are going to be talking about Italy, hard times in that country as we head out to the heartland of the Italian food economy, where Parmesan producers are left out to dry in the face of US tariffs.
Right now on CNBC Make It, this self-employed millennial isn't afraid.
The chance of being hurt while using a leaf blower is about 3,000 to 1. Ooh, unlucky. Never mind, at Curry's PC World, there's a 1 in 10 chance to get half your money back on all 2019 LG OLED TVs. Like the LG C9, described by Which as simply the best. Get blown away with Apple AirPlay, Google Assistant and Amazon Alexa built in. And there's up to £500 off. So the question is, are you feeling lucky? At Curry's PC World. T's and C's apply. GB16 plus. See currys.co.uk.
No one wants to get caught in the cold in London. We're with you. So our boilers come with 2 years interest-free credit to avoid a big chill to your wallet. You'll get a 5-year British Gas warranty. And now we can even quote by video call after work or weekends at a time that suits you. Get a quote by the 30th of November and get £150 off a new boiler or £450 off for existing home care customers. Search British Gas New Boiler. Conditions apply.
Welcome aboard Europe's 169th safest airline.
You were like my 169th biggest crush in school.
Your total body age is 169.
The number 169 never screamed glamour until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
I want Poppy to play cricket for England.
I want Sam to stop screaming.
I want Joe to live a little.
I want Naomi to live a lot.
I want Becky to invent a cure for the common cold.
Whatever the future holds for your children, Vitality Life Insurance want to make it happy, healthy and secure. So when you take out our Wellness Optimizer, you'll get up to 40% off your life insurance premiums.
I want the twins to keep on being happy.
I just want whatever the twins are on.
Just search Vitality Life Insurance. Additional product, minimum monthly premiums and conditions apply.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Italian cheesemakers say they will be unfairly hit by US duties. A group representing the producers highlighted the impact on Parmesan cheese, saying the tariffs will lead to a rise in prices in the United States, which will in turn hurt demand. Where better to find Willem than in Parma, Italy? What an amazing backdrop as well. Although I should tell you, our guest host, Sir Martin Sorrell, prefers a nice Gorgonzola.
Sweet gorgonzola.
Sweet gorgonzola. But anyway, let's stick to Parmigiano for now, Willem.
Well, I mean, you could mention Gorgonzola too, because of course that does also appear on that list that the US Trade Reps Office released that will face targeted tariffs. So you've got Gorgonzola, you've got Grano Padano, you've got this cheese here, Parmesan, which they like to call Il Re de Formaggio. That's the king of cheeses for Italians. What's really interesting there, talking about the impact on prices for US consumers, if you look at the mechanics of this trade, you have a consortium that represents all of the producers of Parmesan. They make sure that these cheeses have a certain quality level. So you've got denominazione di origine protetta, essentially making sure that there's quality control across all of the Parmesan production in this region in north central Italy. The average price they sell to US importers is $15 a kilo. Each one of these cheeses, around 40 kilos, they sell 15,000 of these a year across the world, and about 20% of that goes to the US. That's just in this one particular production facility. That $15 a kilo, though, is the average price. On top of that, the importer has to pay currently around $2.15 of duties to the government. Under these new tariffs that could kick in October 18th, that goes up to $6. Of course, you'd imagine they want to try and maintain their margins on that side of the Atlantic. And so they are looking to potentially increase their prices from $40 a kilo for the consumer in the supermarket to $45 a kilo. And the concern here people have is that that will have a massive impact on their market share in the United States, which is a big market, the second largest market for them after France. And as a consequence of that, they'll be left with a lot of cheese they can't sell. So what are they trying to do about it here in Italy, for instance? Well, the agriculture minister has put in a request to the European Union saying this is an extraordinary situation we find ourselves in. Can you help us? One possible method that they could see that help come to them from the European Union would be that cheeses like this one's probably about a year old right now in terms of maturity, but they can stay here for up to 3 years. They'll be paid money to keep these on the shelves here without oversupplying the market until the situation changes. They can maybe sell them, or alternatively, they'll be given money to try and market their cheese to new places around the world. And in the Gulf in particular, that's a market that Parmesan producers are now looking at very closely because of this possibility of tariffs.
Willem, thank you very much. I think you set the scene. We're all having a cheese platter later on today. It's like
I'm having cheese
subliminal
later. We've got a
advertising,
cheese
isn't
board
it?
at home for this evening.
So does it mean that my gorgonzola is going to be cheaper?
Well, that's what I thought. Yeah, but I think they're going to try and not flood the market. That's the point, isn't it? So I don't know if we're going to get cheaper cheese.
Okay.
But I've told you, I've already given you an English alternative off camera.
And maybe by Christmas you might see the prices. Meantime, Amazon and Disney are reportedly locking horns in a dispute over advertising revenue from apps on Amazon's Fire television devices. According to the Wall Street Journal, Amazon wants to sell a large percentage of ads on Disney apps, but Disney is not on board. The disagreement is being cited as one of the reasons why there is not a deal for streaming service Disney Plus to appear on Amazon services. Martin, perhaps you can make sense of that, because anyone who's not in that world cannot understand exactly what that means.
It shows how tough the competition is going to be on these streaming services. I mean, it's really heating up. So for Netflix, both Disney, Disney Plus, Amazon, Apple, what Apple is doing, I mean, this is going to be a big fight for us. It's for our clients. It's a really interesting set of opportunities.
Is this around content? And content is king. Whoever has the best content wins, because
it's
they bring in
content
the
and
eyeballs.
distribution. I never bought, the one was more important than the other. I mean, content is king has been the common thought, but both are important. But I think what's happening now, I think Disney's in a very strong position. And of course, talking about transformation and transformation executives, I mean, probably the best example is Bob Iger's success in convincing the street. You can see it from the graph there. The stock is up, 25% roughly from where it was on the Fox combination. So Rupert wins again. In terms of
Martin. Sorry? I mean, look, our own group up there, Comcast, which is the ultimate shareholder of this channel.
Same thing.
A huge amount of quality content. Dare I say it?
Absolutely.
Between 6 and 9.
You're not biased. You're not biased.
Not biased. No, of course. But the point being is, it's going to be a vicious war, and the customer acquisition costs are going to be extensive, aren't they?
Very high. But I don't know what Netflix does. I mean, I think the big question is, Netflix model doesn't generate significant profitability. Are they going to increase their subscriber rates? They've done it once, so they're going to have to do it again. Most people say by expanding abroad they're going to be able to cover it. I don't think they are. I think actually they're going to have to. It's a controversial thing to say, because Reed Hastings has always taken the position that he wouldn't do this, but I think they will take advertising. They've already taken product placement on a small scale. You're watching a film that says there's product placement in the film. I think increasingly they'll have to generate revenue from other sources.
Do customers switch off, though, if they're served? Do customers switch off if they're served up ads on Netflix? I mean, what's the advertising?
You may give them the choice. You can always give them the choice. You pay different pricing because advertising does subsidize content. So you can give them the price choice and they can choose. And we do that. We see that already happening. But what you're seeing, what's really interesting is you're seeing these platforms start to Instead of sharing their content, they're going to control their content. And Disney is one of the few, if only, that can do that.
Thank you very much indeed for being part of our quality content this morning on Scorebox Europe.
God, have we upped the quality?
We've done something, that's for sure.
Well,
Always a pleasure seeing you, Martin. He's the most important leg of the three-legged stool, I'll have you know. So Martin Sorrell, Executive Chairman of S4 Capital, thank you. From Karen Cho and myself, two of the other important legs.
A lot of people treat their finances like their health, and for some reason they don't want to peel back the...
Get ready for Brexit on the 31st of October. Find out what you need to do to prepare at gov.uk/Brexit.
Fly from London Heathrow to Shannon from $55.99 each way as part of a return trip with Aer Lingus and experience something new on your next trip to Ireland. Discover the soaring cliffs and stunning scenery of the wild Atlantic Way. Explore the charming local towns and relax by the fireside with some traditional music and fresh seafood. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at aerlingus.com. Offer subject to conditions and availability.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $104.9. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
Live from the TuneIn Studios, I'm Fonseca with your daily sports update. Major League Baseball action continues. Today we've got the Rays at the Astros. This one's going to be at 2:05 p.m. Eastern.
We've had to kind of create some momentum here the last 15 games of the regular season because of the pressure that the A's and the Indians put on us. So we've been on a nice roll here lately.
Once again, 2:05 p.m. Eastern, Rays at the Astros, Game 1. Right here on TuneIn. That's your TuneIn Sports Update.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
The throw, he steps up, he's going deep down the right side, Andrews.
You can listen to it all for free.
The end zone, touchdown.
At home, on campus, or on the road, hear the excitement and pageantry of college football all season long free on TuneIn.
Good morning and happy Friday. Welcome to Street Signs. I'm Juliana Tattlebaum, and these are your headlines. The relief rally reaches Europe, but attention turns to the U.S. jobs report after a run of weak economic data builds hopes of a Fed rate cut later this month. Shares in Apple suppliers jump on a report the smartphone maker is requesting a ramp up in production to meet stronger than expected demand for the new iPhone 11. BP CEO Bob Dudley announces he will retire in 2020 after almost a decade in the role and hand the reins over to the oil giant's upstream chief, Bernard Looney. And Hong Kong's leader, Carrie Lam, invokes emergency powers in the Chinese territory as she battles to contain ongoing unrest.
This morning, I called a special meeting of the Executive Council. The Chief Executive and Council decided to invoke the Emergency Regulations Ordinance to enact a prohibition on face covering regulation. This regulation will come into effect tomorrow.
a very warm welcome to Street Signs. Let's take a look at where things stand on the final day of trade this week. It's been a very volatile week for trading across the globe. Now this morning, the Stoxx 600 is on the mend. It's currently up about 0.33%. And this, of course, follows a choppy day yesterday for markets worldwide. But global markets at the moment being supported by mounting expectations of another Fed rate cut at their meeting later this month. And to just put the context of this move, into context, yesterday the key data point was that U.S. non-manufacturing ISM number. It missed expectations, initially driving stocks lower, but then as the market began to price in another Fed rate cut, we saw a turnaround, and that positive momentum is continuing today in Europe. So looking across the different regions, we're seeing gains, a widespread, FTSE 100 leading the charge higher, with that index up about 0.4%. The DAX has reopened today. Remember, German markets were closed yesterday, so also factoring in the impact of the WTO ruling and the U.S. tariffs due to come into effect against Europe. So that index is up about 0.15%, lagging the broader European market, but overall green across the board. Let's dive into the sectors where the majority are trading in the green, with the exception of basic resources, autos, banks, and insurance. Healthcare right at the top, up about 0.9%. Technology, another strong gainer, and this follows the same trend we saw on Wall Street, where tech led the charge higher. Here in Europe, those chip makers, the Apple supply chain, they are reacting very well to reports that we are seeing strong demand for Apple's iPhone 11. We'll go into a bit more detail on that story later, but the picture for this morning, so far anyway, is positive. But the key this day for investors is going to come later this afternoon, and that is the non-farm payrolls report. Now, hopes for a rate cut from the Federal Reserve are running high. The Fed funds futures market is now pricing in a near 90% chance of a quarter-point rate cut at this month's central bank meeting, and a 50% chance of another cut in December. This follows a run of weaker-than-expected U.S. data. Now, all eyes, as I said, are on that non-farm payrolls report due later today. 145,000 jobs are expected to have been added in the month of September, with the unemployment rate holding steady at 3.7%. But average hourly earnings growth is forecast to have slowed to 0.2%, according to Dow Jones. Now, two Fed policymakers have signaled they are open to another rate cut. Chicago Fed President Charles Evans said he is, quote, extremely open-minded to making an adjustment if appropriate, while Dallas Fed President Robert Kaplan said he is willing to do more, quote, if necessary. Meanwhile, Richard Clarida, vice chairman of the central bank, repeated Powell's mantra of acting as appropriate and added that the U.S. economy is in a good place and that the labor market is very healthy. Now I'm pleased to bring in our first guest, Jim McCormick, Global Head of Desk Strategy and NatWest Markets, to weigh in on that data we saw yesterday and what we can expect from today's non-farm payrolls report. But let's kick off with the market action we saw yesterday. Sure. We initially saw stocks turn lower after that weaker than expected services ISM, and that of course came on the back of the dismal manufacturing print earlier this week. But the turnaround really came as markets started to price in another Fed rate cut. At this point, in your view, does it make sense that bad data is good news for markets?
No, I think we're getting to the point of the cycle where you have to be a little bit careful. Risk assets generally look very expensive against the business cycle. And the arguments you always get is the Fed's going to cut rates and you have to buy something because yields are very low. But both of those arguments have a shelf life. And if we're getting toward end of cycle, I don't think that's the right move.
And I mean, to that point, I mean, looking at the data from earlier this week, that manufacturing ISM, within that, the sub-index for exports was 41. So that was the weakest since 2009. I mean, incrementally lower rates. Does that do anything to change what's actually driving the weakness?
No, I think what you're seeing is the front line of the economy that's exposed to the strong dollar and the trade war is under stress. And that is beginning to spill over into other parts of the economy, and that's got to be a warning sign.
Now, to that point about the strong dollar, I mean, the president came out right after that manufacturing ISM print, calling attention and putting blame on the strong dollar and the Fed for the downturn that we're seeing. Do you think we're going to see more pressure from the president to do something about this strong dollar?
Yeah, I would imagine so. I mean, we're heading into a presidential election year. We know it's going to be close. The economy is looking soft, and let's face it, the trade-weighted dollar is at multi-year highs against a lot of currencies. So it's going to be a big focus.
Now, I guess putting this data into context here, what are you thinking about the actual health of the U.S. economy? Are these data points really worrying to you in terms of a recession on the near-term horizon?
I don't think it necessarily means we should be worried about recession, certainly not imminently. But for financial markets, we've had 2 years where the U.S. has been the outperformer. And I think we are at an inflection point there. And from that point of view, I think we've got a lot lower to go in U.S. yields. We could see a turning point in the dollar. So I think it's important. I don't think it necessarily means we're going into a recession.
And you say a lot lower in yields. What kind of lower are we talking about here?
Well, I mean, let's face it. This is a Fed that has said repeatedly that when you see weakness, you have to cut fast and furiously and keep rates low for a long period of time. So if we are talking about recession, zero interest rates in the U.S. is a perfectly plausible outcome sometime late next year, early 2021.
And now coming to today's main event, the non-farm payrolls report, some analysts are saying that this report is going to be the last, or could well be the last litmus test before the Fed meeting. So what are you looking at most closely in this report, and what are you expecting?
Yeah, I think that we've shifted back to growth being the concern, which tells me that the payroll number itself is very important. What we should recognize is payroll number is very independent from other data that we see. So we think you probably get 170 in payrolls, which is going to be better than what the market expects. But in the grand scheme of things, it's not going to change the picture that the U.S. economy is slowing. But 170 makes an October cut kind of a 50-50.
More uncertainty than for markets. Exactly. All right, well, stay with us. Jim McCormick, Global Head of Desk Strategy at NatWest Markets. Now, our U.S. colleagues will be speaking to two Fed presidents later today. Be sure to tune in for a First on CNBC interview with Boston Fed President Eric Rosengreen at 1820 CET and an exclusive interview with Cleveland Fed President Loretta Mester at 2200 CET. Now, in other news, the Hong Kong government has invoked emergency powers. In a press conference that is still ongoing, leader Carrie Lam said a ban on face masks would take effect on Saturday, and anyone who violates the law could be fined 25,000 Hong Kong dollars. Now, Sherry Kang is in Hong Kong listening to this press conference. Sherry, this seems like a pretty dramatic escalation, and just listening in to the beginning of that press conference before Street Signs kicked off, pretty staggering comments coming from the chief exec.
That's right. You're really just laying out the worrying trends of escalation in violence used by some of the anti-government, pro-democracy protesters in recent days here in Hong Kong. Chief Executive going for this measure that some called as a last resort. And the reason why some are really worried about this, of course, is, potential damage to Hong Kong's reputational, brand as the, one of the leading financial hubs and economic, hubs of Asia. But yeah, Chief Executive Carrie Lam going ahead with this idea of invoking emergency regulations ordinance. Now, this is something that hasn't really been done often in Hong Kong. It does have the precedence of being invoked back in 1967 when it comes to Hong Kong's government, Hong Kong's efforts to quell down pro-communist riots in Hong Kong back then as well. So really, the slogan behind Chief Executive Carrie Lam and 16 other government officials, her secretaries, it said, treasure Hong Kong, end violence. It really was putting the foot down in terms of trying to end the violence. And now, Chief Executive Carrie Lam also said that this is, something that Hong Kong government is doing as a responsible government, and saying that this is something that has been mulled over for a long time. And during the press event, that is still ongoing, that I believe, there have been a couple of mentions about other countries that have similar regulations, including the United States, some European countries like France, Germany, and Spain, and as well as Canada. So certainly the Hong Kong government is not trying to, really give out this image or the idea that Hong Kong is in a state of emergency. In fact, that's something that Carrie Lam said a couple of, times in that press conference, really trying to home in this idea that the Hong Kong government is doing something out of responsibility possibility, but that it is something that's handleable that it is facing at the moment. So as you pointed out, Juliana, that it is taking effect as of Saturday, which is midnight tonight here in Hong Kong, which is just a few hours away. And, just to give you the latest in terms of the sentiment among the anti-government protesters, just earlier in the day, calling for a lunchtime flash mob protest, something of a defiance, I would say, for now. Back to you.
Sherry, thank you so much for that color, and we look forward to continuing to follow this story as it develops. Well, sticking in the region, the Hong Kong Exchange is nearing the put-up or shut-up deadline in its bid to merge with the London Stock Exchange. According to Reuters, a group of LSE investors want the Hong Kong Exchange to boost the bid by as much as 20% and increase the cash component of the deal to make it a viable offer. The London Stock Exchange, of course, rejected the current deal, preferring its separate plan to buy Refinitiv for $27 billion. Neither the Hong Kong Exchange or LSE commented on the Reuters report. Hong Kong Exchange has until next Wednesday to make a formal approach or drop the deal. Well, we're going to take a short break, but coming up on the show, CEO Bob Dudley announces his retirement. We discuss what his successor signals for the company ahead.
There's golf. And there's the golf lifestyle.
Get ready for Brexit on the 31st of October. If you buy items from EU suppliers or sell to EU customers, there'll be new requirements affecting businesses of all sizes. You'll need an EORI trader number and know how to make a customs declaration. You'll also need to make sure you have the right supporting documents for the goods you buy and sell. Find out more about how to prepare. Follow the step-by-step guide at gov.uk/Brexit-traders.
Did you know Carphone Warehouse does business? That's why we understand how hard it is to go from this to this. But when you switch to the Samsung Galaxy S10 smartphone with O2, you don't have to. It's packed with features to help you stay on track on the move. So, if you want to end your summer feeling like this and not this, switch and save today with O2 and get the Samsung Galaxy S10 with 60 gigabytes of data for only £43 per month. Visit your nearest store or go online at business.carphonewarehouse.com/switch and save.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
At Argos, save 25% off homewares across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends 8th of October. Conditions apply. Subject to availability, selected lines.
Otto Sergey now checks for better energy deals so you don't have to. Meaning we can all sit back and relax. Can't we, Sergey? Sergey?
Hey? What?
Tell the people that we can sit back and relax.
Oh, we can sit back and relax.
Oh, don't waste energy worrying about energy. Automate it with Otto Sergey. Compare the market. Keep life simple.
Customer preferences determine alerts based on tariff type, payment type, supplier rating, and minimum annual saving of £50.
Make sure to follow TuneIn today, so you're always in the know. Twitter, Facebook, Instagram. Just search @TuneIn.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raj, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Welcome back to Street Signs. Well, let's get to the latest on Brexit. The EU is, quote, open but still unconvinced by the UK Prime Minister's new proposals for a Brexit deal. That's the message from European Council President Donald Tusk, who also tweeted that the EU stands fully behind Ireland, where Prime Minister Leo Varadkar said the plan misses the mark.
Proposals that have been put forward by the UK are certainly welcome in the sense that we now have written proposals that we can engage on. But they do fall short in a number of aspects. Certainly, our view is that any consent mechanism that were to exist would have to be reflective of the views of the whole of the population of Northern Ireland and not give any one party of any denomination a veto. And also, we need to explore in much more detail the customs proposals being put forward. As it's very much the view of the Irish government and people of Ireland, North and South, that there shouldn't be customs checkpoints or tariffs on trade between North and South.
Let's take a quick look at the British currency and see how it's trading versus the dollar. This morning, sterling up a touch versus the dollar, above that 123.30 mark. But bear in mind, a lot of the strength in the pound has actually been driven by the dollar side of that equation. Yesterday was a down day for the dollar index. It retreated about 0.1%, and it's on the back foot again versus a number of currencies, so the pound being one of those. But bear in mind, it is still much stronger than it was earlier on in the week, above that 123 level. Well, let's get back to our guest, Jim McCormick, Global Head of Desk Strategy at NatWest Markets. Jim, what do you make of what we're seeing right now? How do you see this playing out between the EU and the UK?
Well, listen, I think the key message that we've given to clients is that the UK is approaching a moment of clarity. So there's no longer any appetite to keep kicking the can down the road. Now, we don't think that clarity is going to be a deal by October 31st, so some of that optimism probably needs to be faded, but you're probably going to have a general election in late November, early December. That general election won't quite be a referendum around Brexit, but it'll be close to it. So we're getting to a point where you need to look a little bit more objectively on UK assets. So we're not quite as negative as we were in recent months, but you may want to fade a little bit of this optimism heading into October 31st.
Given that we are still looking at a potential period of, from now until January of uncertainty, how do you actually make money out of this trade, given so many traders, investors, companies are in a bit of a standstill, holding pattern without much clarity on what to do?
Yeah, I think the currency has been the vehicle of choice around the political uncertainty. It's obviously quite low already. We'd probably be a little bit short going into January, but the volatility is coming down again. So currency volatility has been a very clear place to hedge your risks, and it feels like it needs to be higher over the next 3 to 4 months.
Now, earlier this morning on Squawk Box, the guest host, Sir Martin Sorrell, made the comment that Brexit is almost a sideshow for the European Union, given what's going on the trade front, and of course referencing the EU-US trade spat. Does that make sense to you from a European perspective?
It doesn't, because I think there's too much weight on the weakness in European industry being placed on the trade war. The truth is, Europe's industrial weakness is a lot of things, and actually the UK is part of it. If you look at the drop in euro area exports, almost 50% of that is attributed to the UK. So it does matter. The UK is no longer a political sideshow. It's an economic drag on the European Union as well.
It's a great point, especially when you look at Germany and the export downturn that they've seen, that a good portion of that is actually due to Brexit or due to a downturn in the UK, yes, as opposed to China. So what does that make you feel about the outlook for Europe and perhaps more specifically Germany?
Yeah, so we've made very clear all year that the industrial weakness in Germany is going to be persistent, that it's a lot more than just the trade war. And I think the interesting point is that the more it persists, the more likely we have this fiscal policy discussion. So the big change in my mind is that from a policy stimulus point of view, next year is going to be all about fiscal stimulus and less about monetary stimulus.
That's the hope of many investors.
That's right.
But I mean, is that really realistic to bank on that at this stage, given the rhetoric we've heard come out of the likes of Germany?
Well, I think that when you look at rate of change, 3 months ago, most of the German political circles said, no way, there's nothing wrong. And if you listen to what you're hearing today, there's much more open-mindedness to maybe we need to do something. So it's never going to happen in warp speed, but things are changing very quickly.
Now, we're just circling back to Brexit, and from a European perspective, there's the argument out there that Europe has the same, if not more, to lose in a no-deal Brexit scenario, certainly in pockets of the European economy than the UK does. I mean, how do you think about that in terms of a negotiating strategy? We just heard there around the Europeans sticking by Leo Varadkar in Ireland. But do you think when it comes down to it, the Europeans will actually change their stance given how much they have at stake here?
Well, listen, I think both the UK and the EU have lots at stake, but the numbers are pretty clear. 60% of UK trade goes to the European Union, 10% of European Union trade goes to the UK. So the stakes are much higher for the UK than they are for the EU.
All right, we'll leave that conversation here, but stay with us. Jim McCormick, Global Head of Desk Strategy, NatWest Markets. Now, getting right into one of the top corporate stories this morning, BP, the CEO, Bob Dudley, is set to retire after almost a decade at the helm of the oil major. He will be succeeded by Bernard Looney, who is current head of the group's upstream business and has been with the company since 1991. BP Chairman Helge Lund said Dudley's departure comes at a, quote, logical time for the company. Dudley will step down after the oil giant reports its full-year earnings in February next year. And very pleased to say I'm now joined by Jason Gamble, equities analyst at Jefferies, live in London. Jason, let's get right into that timing point. Does this timing seem logical for you for Bob Dudley to be stepping down?
Well, I think so. Bob will turn 65 in 2020. We've always been expecting that 2020 would be about the time he would step down. So I don't think this is any surprise to the market at all.
So what can we expect from his successor, Bernard Looney? Are we going to see evolution or more revolution from him relative to what we saw from Bob Dudley?
Well, it's an interesting question because I think one thing that has really marked Bernard's tenure as the head of upstream is a move towards digitalization. And he's also had a very strong focus on cost control. So those are things that I think are evolutionary in some respects, but digitalization for the industry could be revolutionary as well. Bernard is a great person to lead that type of a transition.
It's an interesting point about cost control. I mean, what does that mean in terms of earnings impact? And do you think we're going to start to see analysts change their forecasts on the back of this appointment, given his track record when it comes to cutting costs and using digitization to his advantage?
Well, I think, again, it's going to be more of an evolutionary story in the near term. Certainly, Bernard has already put a lot of cost control into the upstream. I would say all of his colleagues in the other businesses have done so as well. So we're already seeing the earnings benefit of these cost reductions. Now, digitalization is something that over time I think could cause us to significantly increase our earnings estimates, but it's a little bit early for that yet.
And earlier this morning, just before we kicked off Street Signs, I was speaking to my colleague Steve Sedgwick, who's a real oil and gas guru here at CNBC, and he made the point that Dudley has been incredibly effective in managing the recovery of BP post the Deepwater Horizon disaster. Now BP and the broader oil industry is at a point where the question is how effectively they can manage the energy transition. I mean, there's a huge amount of pressure from equity investors to drop oil and gas companies if they don't at which they adapt. So what do you know about Bernard Looney's track record? And do you have confidence that he's going to be able to effectively manage this at the pace that analysts need him to?
Well, first of all, I should point out that Bob's legacy at BP is absolutely outstanding. He's been a tremendous leader for a long period of time and recently has really taken on the role of the energy transition and positioning BP for that. So Bernard will be stepping into that role. Now, Bernard is actually very knowledgeable on the subject, and I do think that he will be able to continue the process that Bob has put into place. I expect that BP will really begin to accelerate their discussion with investors on how they will be managing the energy transition, including more of a move into some low-carbon businesses.
What do you think investors that want to hear from BP to give them confidence that they're going to be able to be a leader in the energy transition?
Well, I think the big issue right now is the technology that would be scalable to be meaningful to a company the size of BP just isn't really there yet. So I think it's going to be a combination of focusing on the existing carbon footprint of the business, and they're doing a good job of reducing that carbon footprint, and positioning in the types of technologies that can be impactful over time, and that will involve moving into things like power generation. But the pace of transition is going to be somewhat dependent on the pace of technology.
And Jason, can you give us any insight into what Bernard Looney's likely stance is going to be towards shale?
Well, BP recently made an acquisition of BHP's shale assets in the United States. Bernard was intimately involved in that. I think he is a believer of shale as a productive, high rate of return type of asset. So they've already started to make some transition there. Whether they accelerate that pace or not, a little harder to say. I would say, though, that certainly the E&P equities that control a lot of the shale right now have come down quite a bit. So just in terms of whether they decide to acquire or not, that remains to be seen.
Now, to your first point about the timing and the fact that this shouldn't come as a major surprise to markets, BP shares are up about 0.73%, so they're up a bit, but the whole market is up. So it suggests the market wasn't super surprised by this announcement, certainly the timing of it. But if I look down the line, putting it all together, what do you think this means for BP's share price?
Well, I think BP's share price is very undervalued right now. I think that a smooth transition in the CEO position is something that will comfort the market. We expect that BP is going to demonstrate some pretty significant growth over the next few years. I expect that they will be able to grow the dividend as well. Those are the types of things that the market is looking for. I think that this well-planned transition is just going to give the market more comfort that that's going to happen.
Well, excellent insights there. Thank you very much for joining us, Jason Gamble, equities analyst from Jefferies. Well, coming up on Street Signs, we go to Parma, Italy, home of the famous Parmigiano Reggiano, to gauge the full impact of the U.S.'s new tariffs on EU goods. Stay with us.
Yeah, we're going to need 500 more units pronto.
We don't have that kind of money right now, Carl.
Get ready for Brexit on the 31st of October. If you buy items from EU suppliers or sell to EU customers, there'll be new requirements affecting businesses of all sizes. You'll need an EORI trader number and know how to make a customs declaration. You'll also need to make sure you have the right supporting documents for the goods you buy and sell. Find out more about how to prepare. Follow the step-by-step guide at gov.uk/Brexit-traders.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
At Argos, save 25% off homewares across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends 8th of October. Conditions apply. Subject to availability. Selected lines. The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $1,049. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
The biggest cat in the world was longer than a cricket bat. Think that's big?
Tonight's Euro Millions jackpot is an unmissable £169 million. 169 million! Now that's big.
Euro Millions from the National Lottery. Amazing starts here.
Estimated jackpot is capped at €190 million. Rules and procedures apply. Players must be 16 or over.
Welcome back to Street Signs. I'm Juliana Tattlebaum. These are your headlines. The relief rally reaches Europe, but attention turns to the U.S. jobs report after a run of weak economic data builds hopes of a Fed rate cut later this month. Shares in Apple suppliers jump on a report the smartphone maker is requesting a ramp up in production to meet stronger than expected demand for the new iPhone 11. BP CEO Bob Dudley announces he will retire in 2020 after almost a decade in the role and hand the reins over to the oil giant's upstream chief, Bernard Looney. Hong Kong's leader, Carrie Lam, invokes emergency powers in the Chinese territory as she battles to contain ongoing unrest.
This morning, I called a special meeting of the Executive Council. The Chief Executive and Council decided to invoke the